Every company is investing in AI, and to underpin that AI, everyone needs infrastructure or a data center to enable that to work. So today I'm going to look at two of the biggest players, or two of the highest potential players in the AI infrastructure space, which is NBIS and IREN. I'm going to compare them. Before we get started, subscribe if you want to see more videos like this, leave a comment of which one you prefer, and leave a like. Before we get started, please remember this is not financial advice. This is for information and entertainment and for my own purpose. So what is NBIS? NBIS is a company that builds vertically integrated AI infrastructure for companies to utilize, and they have very GPU dense facilities. This is the one that I am personally invested in. And on the flip side, what or who is IREN? These are an Australian AI infrastructure company that has started to pivot from Bitcoin mining into AI infrastructure and data centers. So they do have a past. They are more long established than NBIS, so they've done a lot of Bitcoin mining. So they've already got the facilities there. They just need to transition over into AI infrastructure. So how do each of them make money? NBIS makes money by selling GPU infrastructure capacity and offering managed AI cloud services. So their revenue comes from AI infrastructure and service fees. So on the flip side, IREN have a dual model. They have ongoing cash flow from current operations from Bitcoin mining, which I don't believe they're going to stop. And then they are now having revenue coming in from AI cloud, renting GPU capacity and renting out data centers for companies to use. So overall, NBIS is a hyperscaler partner that supplies GPU and managed AI infrastructure, whilst IREN combines data center potential with existing Bitcoin mining facilities. So who is performing better? It's a hard one to say. It's two companies at different stages in their life. Return year to date on stock performance, IREN is up 519%, whereas NBIS or NBIS whatever is up 310%. But over the last year, they're both up just over 500%, but that is just year to date. So if we take a look at the financials, NBIS revenue is up to 105 million, which is up 625% year over year. Earnings per share beat expectations by 10%, sorry, so that was quite nice. And annual recurring revenue outlook has been upgraded to 900 million to 1.1 billion dollars, up from 800 million dollars. But what is important to note is they are not yet profitable. They are in a heavy growth period, which includes a lot of capex spend. So that is reflected in the balance sheet, and they are still operating at a loss. On the flip side, IREN have reported revenue of up to $501 million, which is up 168%, and adjusted EBITDA is up to $270 million, which is up 395% year over year. They were targeting $200 to $250 million of annual recurring revenue from the AI infrastructure side by December 2025. In the last report, it was currently 7 million, so that is a massive increase. But they posted a trading update, which I'll put up here, and they are on track for $500 million by the end of Q1 2026. Very impressive. Very, very impressive. So I'm going to quickly jump into the financial snapshot, and we'll delve into those figures a little bit more. So if we take a look at NBIS first, as you can see, the annualized recurring revenue guidance has been increased, and this was before the announcement of the Microsoft deal, which I will get on to. Revenue for Q2, there we are, it's up 625%. Core business achieves positive adjusted EBITDA ahead of plan, and they are in the process of securing more than 1 gigawatt of power by the end of 2026, which they are certainly going to need with the new Microsoft deal. And if we look down here, the CEO said, demand for AI infrastructure, compute, software and services is only going to get stronger as use cases multiply. We are aggressively scaling up capacity to capture this substantial opportunity and are in the process of securing more than 1 gigawatt of power by the end of 2026. So very positive things to look forward to. just need to make sure they deliver on them. And if we look at IREN, not gonna lie, this is the first time I've looked into the company for this video. Well impressed. If you just look at all the financial figures up here, that is quite impressive growth across all of those metrics. But if we scroll down, you can see here they were targeting 200 to 250 million annualized revenue by December 2025, and they're now on track for that 500 million by the end of Q1 2026. So that's rather impressive. They've paused further expansion on the Bitcoin mining. Doesn't mean they're stopping it, it's just not expanding into it. They focus on AI growth, so they really do see a lot of promising opportunities in the AI space. And if you look at their reasoning behind it, organizations leveraging AI in at least one business function, or more than one business function, is grown from 55% in 2023 to 78% in 2024. I imagine that's even higher now, and then this metric can be moved up. There might eventually be organizations leveraging AI in at least 10 business functions. You know, the room, the ceiling for AI is the sky right now. No one seems to have hit it. And then this is their plan for expansion. So they're using the Blackwell chip from NVIDIA, and they are a preferred partner. So their monthly revenue from GPU composition is estimated to increase by 8 to 10 times the amount it currently is by the end of the year alone. So yeah, quite impressive. But like I've subtly hinted there, what partnerships are these companies signing? So NBIS has signed a Microsoft capacity deal, which is currently worth $17.4 billion over the next 5 years, with the potential to go higher. And that just shows, if the big companies are buying it, that there is a huge market for this, and if they can deliver on it, because they currently don't have the capacity, it's going to do them so well going forward. And then IREN are an NVIDIA preferred partner, so they get access to the newest GPUs, which means that their infrastructure should always be the best in the business, so to speak. What is the future outlook of these two companies? NBIS needs to keep investing in its capacity and manage to actually deliver on a lot of the contracts that they've got, because there has been a lot more news that I haven't gone through, but they have got a lot of contracts in the pipeline and they need to deliver on those. If they fail to deliver on those, I think there'll be a bit of an issue. Obviously they're going through a massive capex spending. They need to be able to cover that spending and not find themselves in debt issues. I think they'll be okay. That is my personal opinion. But yeah, they really need to deliver on those. And for IREN, it is just to convert the current infrastructure for AI data centers, and then from there, really, I think the sky is the ceiling. They've already got the facilities. It's just shifting the business model a little bit to fit the market, and nearly every business in the world is looking. What are the key risks for each? So I've just labeled 3. There might be a little bit of overlap, but NBIS, number 1, there's an execution risk. Number 2, it's capital intensive. They need to make sure they can actually afford it. And number 3, if any supply chain issues become apparent, they may not be able to hit that capacity that they need to deliver for the customers. For IREN, it is exposure to the past business was working. It's very volatile, and yeah, obviously they're eating up a lot of energy. Energy prices aren't coming down really for businesses, speaking from my personal experience. So yeah, they need to be able to manage the exposure to energy. Number 2 is the transition into AI. If they begin to struggle, then they may struggle to meet their expectations or what they put out with shareholders. And as you know, if companies don't meet the plan, the share price plummets. And number 3, which is the same as NBIS, it is supply chain availability. They may be a preferred partner of NVIDIA, but if NVIDIA start having issues and they can't keep building these up-to-date data centers, are they going to be able to deliver the contracts? That is the key there. So yeah, to summarize, for me, NBIS is a high growth, more speculative play, but I think they've got more upside potential personally, and I am invested in them, so that is my belief. For IREN, is a steadier, more reliable business. They are already operating well, and they are just shifting the business model to capture a huge opportunity. So I think both are placed quite well in the industry to do well. It's just, if you want to play it safer, which IREN did really impress me with the financials when I was looking into it and the plan, IREN's probably the safer bet, but NBIS offers higher growth potential, I think. So yeah, let me know your thoughts below on the two stocks. Looking at them, leave anything I might have missed out in the comments below, and I will see you in the next one.